With Bitcoin's prices falling and extreme fear in the market over the last few weeks, many people are starting to hear this thing go around time and time again. Just buy the dip, buy the dip, buy the dip. And in today's video, I'm sure my title and the video topic is going to probably piss a few people off. My apologies. But I want to talk a little bit about why just having the mentality of just buying when you see red may not be the best idea in the short term, and how, you can kind of take a different approach to quote unquote buying the dip in order to kind of capitalize on gains and maximize gains rather than just blindlessly going into crypto every time we see red. And sometimes when we're stuck into a consolidationary downtrend, you will maybe see a lot of red before you will see a lot of green. Okay. And so with that being said, today's focus is going to be more on how you can go about buying the dip and less of a manner of just blindlessly buying just because you see a lot of red in the market, and how I approach these things in order to maximize gains, because my whole goal here is to maximize gains in the most stressless way as possible. I don't like to blindlessly aim. I like to aim and I like to fire. And so with that being said, of course, let's go ahead and let's get into today's video. So overall, I am extremely bullish on the future of cryptocurrency. It's not even remotely close. I do owe a lot of my, gratitude to crypto. It's of course changed my life with my YouTube channel, changed my family's life. But at the end of the day, I feel like it's going to change even more lives. And I think that going forward, this is really just the base. This is just the beginning. Now, whenever we look at this from more of a technical perspective, not only does, the long-term sentiment of crypto seem bullish to me, but also some of the data, some of the statistics. If we, for example, look at Bitcoin's all exchange reserve, basically this is going to be the amount of Bitcoin held in all exchanges wallets. We're still in a decline. Whenever we are seeing Bitcoin being taken off of exchanges and put into people's cold wallets, their hard wallets, and they're taking it again off the exchanges, that means that they have no intentions of trading it. They have no intentions of selling it. They're under the belief that we're going to start to see, Bitcoin rise back to 100K at some point. And it is very, very clear that when we're seeing the exchange reserves dropping, we are still seeing technical statistical bullish sentiment, and that's always a good thing. And it's dropping significantly fast at this point, lower than it's been almost all year long. And even if we look at the Bitcoin exchanges inflows, just to confirm this, you can see that generally speaking, when we're going into a larger corrective moment, right, whenever we're going to see the market generally decreasing significantly, you can see how the exchanges inflows tends to increase rapidly. And that's people trying to get out. That's people like, okay, I'm done. I need to get out for a little while before I want to work my way back in. I don't want to lose any more money. And you can just see that's not what's happening right now. We're not seeing people bringing that money being transferred back to exchange wallets. It's simply just not happening. A lot of people are holding. A lot of people aren't doing much. And so that's leading me to believe that there is still a very strong faithfulness in crypto, even if the overall fear and greed index and things of that nature are showing some extreme fear. And lastly, if we look at the leverage ratio, you can see here that although we just seen a massive leverage dump and a lot of people were getting smashed, people are still adding, right? We're still seeing leverage start to slowly increase. And overall, as though, even though the market is dropping, what we tend to see is that when we have these huge leverage shakeouts, what typically will happen is that the market will likely continue to the downside, but leverage itself will start to increase. And that increase in leverage will eventually bring the market back up before eventually, of course, needing to be knocked right back down and restarting this entire process. It's kind of a weird thing, but it's what happens, okay? And so what that tells me is that overall, yeah, likelihood is we're going to see this market continue. Now, of course, there are invalidations. There are invalidations such as us losing this $40,000 level. We lose that, we're probably in trouble. But at the moment, that's not what we're seeing happening. And so overall, my long-term and mid-term sentiment for crypto is extremely bullish. But I want to talk again today about why just buying the dip, buying whenever we see red like this, could lead you to be stressed, and it could lead you to make some irrational decisions that cost you some of the gains we aim for. Because again, if you started to buy right here, right, the market fell and you're like, oh, it's red, we're at the bottom side of the support channel, I'm just going to buy in because, again, buy the dip. Well, you're probably still looking at some more losses. Now, if you're the type of person who puts in a little bit of money into it every single week and doesn't look into it, this video doesn't apply to you. But if you're constantly making changes and trades in your portfolio, I think this applies to you heavily. And so I'm going to talk to you guys about the 4 ways in which I quote unquote buy the dip. And the 4 ways in which I do it are all based off of confirmations. Absolutely, 100%, no questions asked. I look for confirmations before making purchases. Now, the reason that I say that is because we can be stuck within a downtrend for significant amounts of time in crypto. For example, whenever you saw this first dip right here, and we came back to these key levels of support, had you just bought the dip because it was back down, you would be down right now on Bitcoin specifically about 20% in the span of less than a month. Now, If you would have maybe, saw that crypto continued to fall and it started to fall a little bit longer, we hit a key level of support, sure, that's looking good, and you bought in on this big red candle whenever it recovered a little bit, you're still down 17%. And so you can kind of start to see that although you are buying these big red candles, you are buying the dips, you're still stuck within a downtrend. And I never buy when I'm stuck within a downtrend. So the biggest and the clearest confirmation that I always look for before daring to purchase a quote unquote dip is when we see breaks of trends. So of course, as you can see here, we've put in high number 1, 2, and 3 on this key level of resistance. So personally speaking, if I'm quote unquote buying the dip, the way in which that I'm doing it is I'm looking for the breakout to the upside of this trend line, because at that point we have now removed a key level of resistance from above us that could potentially see the price get pushed back down to the downside. And although I bought the dip here, I could have bought the dip here. You know what I mean? And so that's why I purposefully wait for these confirmations of breaks to the upside, and it saves me from buying within some of these key levels. The second confirmation that I look for is the interactions with our exponential moving averages. Now, our exponential moving averages have historically proven to be good indicators of bullish or bearish momentum. If we look back here, whenever we saw this massive move to the downside from, upwards of 60 grand down to lows, $29,000, we can see that a lot of the movement in which we saw had us stuck below our exponential moving averages. But once we started to work our way above them, once we started to recapture them, that was a fantastic sign that, okay, look, we're starting to work our way up. We're turning some of these levels of resistance into levels of support, and that could be the momentum we need to continue upwards. Now remember, no confirmation is a confirmation of 100%. None of these confirmations, such as breaks of trends or clearing of EMAs, says for sure 100% that we are going to work our way back to the top side. But they are signs and they are little sequences that need to happen in order for the big moves to happen back to the upside. So the second thing that I look for with Bitcoin's price specifically is that if I'm going to make another buy, say we break trend here, boom, I'm going to wait to make another buy until we clear the 20 and the 50 daily EMA. Those are the two that I have noticed. Once we get past both of them, we have a strong tendency of going up, right? Because we clear the 20 sometimes and then continue to the downside, such as we did here. But once we clear that 20 and that 50, and especially if we can hold some support on both of them, that's been a key sign that we're working our way back to the top side here. And so that's the confirmation number 2 that I look for personally, like, okay, where do we get in now? Now, after that, what else am I looking for? Well, from there, if I want to make another buy while prices are still down, I'm looking for the setting of a new structural high. Now, what that means is that I'm going to be waiting for the price to set a higher high on more of a midterm time frame. So I'm going to go out to the 4-hour charts and I'm going to look at this thing and I'm going to say, okay, where have we gone in and touched the trend line that we were in? And what I'm going to do is, as the price maybe breaks out here, I personally am not going to do any buying until we start to see these confirmations. And one of the key confirmations for me is that we're starting an uptrend by setting a higher high. Boom, we go up and we set this higher high here, okay? Especially if we're not seeing bearish divergence on the RSI, that's always a good time to buy in my opinion. But that's also going to be very relevant because that's the first sign of an uptrend. Because even though we're, seeing a dip and people are saying buy the dip, buy the dip, buy the dip, realistically, nothing in what we're seeing from Bitcoin over the last month has said uptrend. None of it at all, okay? And so until we start to see these higher highs getting set, I don't see the relevancy of just simply buying aimlessly. You know what I mean? I don't see the importance there. And then of course, the very last confirmation that I always need, the biggest confirmation on earth to me, is the clearing of our key Fibonacci levels, right? So personally, what I would do, if I want that final confirmation, like, look, we are getting into the bull market, I want to take advantage of whatever discount I possibly can while the prices are still not at all-time highs, I'm going Fibonacci's, and I'm going to draw Fibonacci from the all-time high to the lowest point in which we set. Once we come back up and we clear that 786 level here, right? That's the door to a new all-time high. And so I know this is likely my last chance at buying at a discount. So although, yes, sure, the price is all the way up here, and I may have bought much higher than I would back here, I'm also mitigating the risk of seeing something like this happen, in which I dollar cost average in just because markets are red, and I'm also seeing a massive move to the downside that cost me 20 to 30% of my portfolio. I would much rather play this thing a little bit more safe and possibly lose some gains, but still make gains, rather than play it a little bit more risky and risk a much more substantial amount of my money. That is not how I like to play. And I notice people, what happens is that they'll get stuck in this mentality of buy the dip, and they bought this 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 dip. And next thing you know, by the time we actually reach a bottom somewhere, no one has any money left to buy the dip. No one has any money left to buy on these confirmations. No one has money left to buy when we clear the EMAs. No one has money left to buy when we set new structural highs. And they start to really panic because realistically, they're watching all these gains happen and they can't be a part of it because their average costs are so high amongst this fall. So whenever I say buy the dip, I'm not saying don't buy crypto right now. I'm not saying don't buy crypto because the prices are low, but I'm saying set a strategical plan. The fundamentals of crypto are still bullish. And so that means when we're seeing a dip, we need to plan our entries rather than plan our selling. But that does not mean to simply just be buying every time the market turns red, because that can be a very, very risky thing to do. Now, again, if you're one of those people who are simply just going to buy a little bit every single week, no matter what the price is doing, this video doesn't apply to you. But again, if you're making a bunch of changes and trades within your portfolio, I think you need to take a much more game plan approach of how you quote unquote buy the dip rather than just aimlessly firing. Okay, that is my game plan. That's how I go about things, and that's my opinion on it. And it was something that, again, I know this video is going to get flack. I know people are going to get pissed, but it's okay, because at the end of the day, I feel better knowing I gave my opinion. And so with that being said, of course, I hope you guys did enjoy. If you did, you can of course let me know by smashing that like button and subscribing to the channel if you are new. We talk about things like this all the time over in my Patreon, so if that is something you'd be interested in, definitely go check it out. If not, I provide free content on YouTube all the time, and it's no problem. But with that being said, of course, I hope you guys did enjoy, and I'll see you next time.